This week was not easy. FOMC on Wednesday and its energy spilling into Thursday. Nasdaq at all-time highs. End of month, end of week, which also is the start of May. Every variable you could add to a trading week was present this week, and I'll show you exactly how I navigated each day. Welcome to the Displacement Diary, documenting my trading journey, one trade at a time. On the left is the Nasdaq daily analysis from last Sunday, and on the right is what actually happened this week. And you'll notice that that's Monday. Tuesday created the weekly Judah swing, respected that quadrant level before price rallied up. But the first thing here is, let me tell you of the headline. 5 green days, $550 added to the buffer, 2 weeks of discipline, and the buffer grew by 63%. Before I dive into the weekly chart, if you are new here, welcome. Download the free glossary guide of terms in the description. It will help you follow the analysis in the video. So on the left here is the chart from last Sunday, and I showed you that this was my area of interest. And on the right, you can see that price has worked its way into the second quadrant of the FIB projections. So that's where we are now. And price is making its way to the half standard deviation. It's already closed above this FIB 137.5%. So that's where we are. So I was navigating that this week. So before the daily trades, let me set the context for those who did not watch last Sunday's week ahead video. So we are working in the second quadrant of the FIB projections. We moved from the discount area of Q2 to the premium area, and you can see how price respected that FIB quadrant, 143.75. And this is why it's important to study higher time frame and then work your way within the lower time frames, because you can have a map of where price is trying to head to. So the first one in terms of context was NQ at all-time highs entering the week. The monthly and weekly bias remained bullish, but cautiously was the caution. I narrated the caution around the premium week levels of the FIB levels. And then number two, SMT divergence in play with the Dow making a lower low, a lower high, while Nasdaq and SPX made higher highs. And then looking at the US dollar correlation to the indices, which was cracked. Normally, you would want the dollar going in the opposite direction with the indices, and this is not yet happening, and it brings uncertainty. And fourth, end of month premium week was anticipated. April being the last week of April meant that monthly candle could form its week, and counter trend trades could be anticipated, and we could see the counter trend trade there on Tuesday. And then finally, FOMC on Wednesday, creating high resistance liquidity environment and its energy spilling over into Thursday for volatility. So on Monday, I'm looking at the interesting key levels that I was looking at marked here, which is that bullish order block, sell side liquidity. These are marked up clearly. And the model I was looking at is the market maker buy model, which is basically prices moving up in the buy direction to to take out, you know, to pair orders that have been selling down all the way to the sell side liquidity. So I saw that there was a sell stop rate there before the New York Open. It was raided, and then the fib 128.125 was respected, and price went above the new week opening gap 50%. So this is the new week opening gap high, new week opening gap low, and that's 50%. When price closed above that and above the New York open first presented fair value gap, I attempted longs targeting that minor sells buy side, or I labeled it wrongly, buy side liquidity, and that one. So this should be buy side liquidity. So that's what I was targeting, but price reversed on me and took me out. And I saw that price respected that level again, and I attempted longs above the first presented fair value gap. Again, I was taken out. And when I saw that price was below the fib projection and the new day opening gap, and I had sell side liquidity in view, I took aggressive shorts there. And then price came below again, rejected the 50%, the fib projection, came back down, and then I took another short, aggressive shorts to the bullish order block, and then price reversed, inverting this fair value gap, bearish fair value gap. And again, I then took some longs trying to target all the way to the swing high. So I took a partial profit there, and then moved my stop loss into profit, and then did a pyramid there. But then price came back and took me out. But at that point, I was already in a total profit of 127 for the day. And on Tuesday, it was one trade, and it was the cleanest trade of the week. And it was based on the market maker sell model, that leg. So first, I annotated the buy side liquidity, which was not purged, so it was a safe. It was safe for now at that time. And then I saw a market structure shift on the 1 hour chart, and then price went up, respected the 50% of that fair value gap, dropped. So if you look at these blue lines as well, that's the inversion BC, which was also respected. So that was confluence, indicating to me that we could see price going down. And then number 4, after the market structure shift, where price went down, came back up, and again we were respecting this fair value gap in blue and this CB as well. Can you see there? And then price dropped down, created this CB, and then rallied back up into it and just tapped into it. And that's what's called the institutional order flow entry drill, so IOFED. So that was respected. That was confirmation to me that price is going to go down. So I looked at what could be my targets, which are the minor sell side liquidity there, 1 hour, and the relative equal lows there. And my entry was there when we were creating these bearish order blocks. So these two, they are a bearish order block. I entered there, and then price dropped below that, and when it closed below it, creating this bearish order block, I knew that I could hold that trade, and I moved my stop loss at some point in time to break even, and price delivered to the relative equal lows before it rallied up, and that gave me $75. So this is just the context of Tuesday and why it worked. So you can pause the video and read through this. So you'll notice that on Tuesday I traded off the 1 hour chart because it was not very volatile. But on Wednesday I switched to lower time frames. I was trading on the 5-minute and 1-minute chart. So I'll walk you through the Asia close London kill zone that I traded as pre-market before we move into FOMC news. So this is the fib projection level that I was monitoring, the 125%. So when price in Asia was above that level and I saw a displacement there and the lows of that BC were respected, then I was targeting longs, going up with low risk trades, but that failed. Price went back against me, and I saw the fib projection 125% respected again, and then I attempted another long, and I went into some profits there. Just like there, I went into some profits, and then price reversed on me. Then when price went below the fib level, I then took some shorts targeting the sell side liquidity that was down there. So the first trade, there were two pyramids there. They profited me. And then when I saw a rejection of the new day, this is the new day opening gap, price going above it, I attempted another long, which went into some profits, good profits, but I wanted to hold all the way up to there, up to the buy side liquidity. But you can see there was a sharp rejection there, and I was taken with a small stop loss there. I was taken out. So when I saw that rejection, I was then trying to take some shots all the way to the sell side liquidity, and you can see I went into some profits, and then price reversed on me, respecting this new day opening gap 50%. And as soon as I saw that and came into the 50% of that CB, so at that 50%, which is a sensitive area, I then took some longs, but I didn't see the speed on the 1-minute chart that I was expecting. I expected price to now run away from this, all the way to the I was targeting that time the 70.5%, and I will explain that. But I didn't see the speed on 1-minute chart, so therefore I just collapsed the trade and waited. And you can see there was a sharp reversal there, but respected the new day opening gap 50%, and then went up. The bodies came back and price came back, and the bodies were respecting the low of that inversion CB, and then price rallied. Now can you see how clean it is now, all the way to the 70.5%. So the sweet spots for taking profits is the 62% and the 70.5%, which is that annotation there. That when you are in a market maker buy model, those are or even the sell model, you need to look at those as your take profit targets. So that gave me $38 in the morning, and then I went on to trade the FOMC session at 3 o'clock Eastern time, New York Eastern time. So on that one, I'm going to show you the institutional two-stage delivery for FOMC, and it applies to high impact news such as NFP, CPI, PPI, and JOLTS. So I defined my dealing range. This blue line is the bullish order block, and there was sell side liquidity there as well. So my dealing range was this area on the sell side, and the buy side was based on the higher time frame Fibonacci 70.5% there, which is there, which is also in confluence with the new week opening gap low. So that was the area that I was looking at after FOMC news. Then I saw that these areas, sell side liquidity, could be attacked. And then there was also reference to the first presented fair value gap during the New York AM session. So this is when New York opened. So I was monitoring that as well. And as you can see, price respected that first presented fair value gap, went up, came back, tapped into it, respecting it. So that was telling me that the institutional orders were bullish. And you can see we were respecting it. New day opening gap there, price went above that, took out the buy side liquidity there. And at that point, I was seeing that there are these relative equal highs which were vulnerable, which will be tapped, and they were just below the 70.5% fib and the new day opening gap. So that became my target towards the Monday first presented fair value gap. So when I saw the displacement above that 50% fib with a BC, I then entered my long. Price came against me briefly, and there was a bit of it, but you can see that the bodies respected the halfway level of this BC. So I was good to hold, and it was also respecting this 50% fib. So I held that trade. Price tapped the buy side liquidity, which was vulnerable. I did not panic. Price came down, respected that BC again, came back and respected it again, and then eventually price rallied explosively. You can see there to the fib 70.5%. And immediately after, my take profit was hit, look at how price violently came back down and then violently went up again, respecting the Monday first presented fair value gap. And then this is now the second stage delivery there. You can see that. And then after that, look at how it respected, and it took out the liquidity, the stops that were there before it then rallied up. So for those that looked at this, it then further went up on Wednesday. But during the Asia session on Thursday, price dropped back again. So that's the volatility that you have to be careful about, on FOMC days. And I begged $30, for that trade. So on Thursday, you can see the continuation of the energy, FOMC energy into Thursday. And I attempted a short first, which failed, and then went into a long. So I'll walk you through my thought process. So I saw that there was a page and reflect on the 4-hour chart, which is that one. Price went back inside it, creating a swing high, and then price dropped down. So, and then this is the new day opening gap. Price played around there, and then when price was closed below the new day opening gap, that bar, which is also below the fib projection level that I was monitoring, which is the 1.5%, I was then looking for a short to the Asia session low, which is standard deviation 1, and to this Wednesday low, and to the bullish rejection block. This was the price that I was then looking at. So I took a short there, went into a bit of profit, but you can see how an old new day opening gap was respected. So this was another new day opening gap from so this Thursday, so Wednesday, from Tuesday. You see it was respected, and then I was taken out. And then at that point I saw this volume, not volume imbalance, this fair value gap CB 15-minute, which turned into an inversion fair value gap, which triggered longs in my mind. So as soon as price went above that, the next target, which was a low hanging fruit, was the new day opening gap high. I did not want to try anything ambitious to try and run the price all the way up, because you can see the sudden turns of price there. So I just went in aggressively to that high, and you notice that the take profit was hit, and then price continued, but I didn't need to try and do anything else on a volatile day like that, and that netted me $114. Okay. And this is Thursday New York Open, and I was trading the regular trading hours gap. It was quite a huge gap. I think, if I remember, it was 361 pips. So that's from that point to that was the gap that I was looking at, which was quite a huge range. So price drove down to the 50% level of the regular trading hours gap, went into the new day opening gap, failed to reach the 50% of the new day opening gap, and then when price went above this CB and made it inversion, I took a long there, and you can see that I went into some good profits there. This is the 1 minute chart here, so I went into some profits. Price respected the new week opening gap low, reversed there, and then took me out, and that CB was respected again there. You're looking at that week, so I attempted another long because price was failing to even come down there, and also it was respecting this new day opening gap, so I attempted another long, was taken out, and then I waited. When I saw that price had closed below the 50% and was now back again below the CB, that was my reference point, and had taken out that without showing any signs of going bullish, I then took 5 lots from the new day opening gap 50% to the new day opening gap low as my target. I didn't care about what else would happen, so that hit the target, and then I was out of the market, and I begged $75, and then price eventually went up. Then coming to Friday, so it was thank God it's Friday drop, which I anticipated, but the market rallied. However, discipline helped me to come up with a profit. So I had the wrong direction, the right discipline, and I still profited, and I'll walk you through. So I anticipated that the weekly premium week could form, which would normally reverse by 20 to 30%, and the targets where the 20% level is there, 25%, and then the 30% level there, which is in confluence with the fib level there on the right. So that was my target for shorts. So price closed below the new day opening gap, which is that new day opening gap. So price came and closed below that. As soon as it closed below that and it respected the high and the CE there with that wick, I entered. So this is a 15-minute chart. I entered a short and I didn't suffer a lot of heat. Price went to the sell side. I didn't want to collapse it. I wanted to hold all the way to the target, and then price created a bearish order block, which is that one, and which was tethered to a CB, which is that gap there. So I was holding, and it was being respected there as well. So I was holding all the way to try and get to the target profit, but that didn't work. So I was stopped in profit. I'd moved my stop loss from above the new day opening gap to that. So I ended up with $1.40 break even. Price went up, came back, respected again that CB, and closed above the new day opening gap there. And then at that point, it was just before New York Open, which could be volatile. So I just took a long, targeting the buy side liquidity there, which is also in confluence with the New York Midnight Open. So New York Midnight Open, that's where I put my take profit there, and then it hit. Price rallied, continued rallying, into this premium quadrant, and that gave me $31.65. So this is just the summary of the running week, each trade that I took, and you can see how that added up to $515.05 and 5 cents, taking my buffer to 2.8k from 1.7k. That represents a 63% increase in 2 weeks. So that shows how discipline works sometimes. Finally, this is the evidence, the proof, a screenshot from my FTMO platform showing the green days. So that's the April day trades and the Friday trade there. If this video helped you, hit the subscribe button. I post the weekly reviews every weekend, and the week ahead analysis every Sunday. Both are free. Both show you exactly how I navigate the FTMO phase 2 challenge in real time. The glossary of terms is linked in the description. It's a free PDF download. It will help you understand the terms that I use in these videos. Nothing in this video is financial advice. This is my personal trading journal for educational purposes only. Process over outcome. See you in the next video.